Cryptocurrency is the modern-day casino, with some people making it big overnight whilst others lose their shirt. This last week was no different as the markets crumbled, with Bitcoin, Ethereum and Coinbase all down big. Even Binance had to suspend trading. Bitcoin fell to $27,000, losing 8% in 24 hours, and Coinbase, the crypto exchange, fell 25% on earnings as shockwaves were sent through the cryptosphere. This sell-off was triggered by the stablecoin Terra USD, known as UST in the market, which lost its peg to the US dollar and wiped out the support of its non-stable coin partner, Luna, which dropped 99%, losing billions of dollars in just a few days. As of Wednesday, the price was $6.75, but by Thursday afternoon, the price was just 2 cents. Like any market crash, people were clambering for the exits as the price tumbled, with around $200 billion wiped off the total value of all crypto. But the principal concern is that this happened to a stablecoin, which is supposed to be pegged to real-world currencies, acting as a safe haven for crypto investors. But as KSI found out the hard way, it wasn't such a safe investment, with the well-known YouTuber losing almost $3 million in the space of a few months. So sit back as we explain what is Terra Luna and how Terra Luna was wiped out. Here's how it happened. First off, what is Terra Luna? Well, Terra is a stablecoin whose price is linked to the dollar by algorithms and game theory. Some call this ponzi-nomics, as its value was supposed to stay steady, offering some safety in the wild west of crypto. But given UST was an algorithmic stablecoin which uses a series of smart contracts to keep the price at $1, it didn't have billions of dollars of cash or other assets in reserve. Luna, on the other hand, is Terra's satellite asset. It has always been possible to exchange one for the other and vice versa, with Terra trading in line with the value of $1 while Luna would fluctuate. In theory, this means that one UST should always be worth $1 as long as Luna has value. How did it fail? Well, there was a major sell-off, with customers trying to withdraw cash which the algorithms couldn't keep up with, meaning the Luna Foundation Guard, a crypto group and its operator, were forced to sell their Bitcoin reserves to try and save the stablecoin, which in turn pushed down the value of BTC and impacted the entire market. The coins were originally thought up by Do Kwon, a 30-year-old Singaporean and Stanford dropout who launched the coins in 2018. Both Terra and Luna are supposed to act as a balancing mechanism, where one is automatically created or destroyed based on the supply and demand of the other. If UST ever fell below $1, arbitragers would buy UST and then buy Luna at a discount, which would prop up the price of UST. If the opposite happened and UST went above $1, people would use their Luna coins to buy UST and resell them on another platform, which would bring the price down. To summarize, when Terra's value drops, Luna holders are supposed to automatically trade in their coins, which props up the price. A clever system, but one that only worked on paper. Some are blaming the sudden drop because of a large entity who may have dumped billions of UST into the market, which shattered its peg to the dollar. But others are more realistic, suggesting that algorithmic stablecoins were built to fail because they rely so heavily on consistent demand. Both coins were falling so fast that Binance stopped trading momentarily. You might be wondering why so many people were invested in Terra anyway. The demand for the stablecoin was driven because of a savings protocol called Anchor on the Terra blockchain, which promised a 20% annual yield. Holders of Luna would earn payments similar to dividends when transactions of stablecoin were processed. Holders could also vote on taxation and governance of the Terra stablecoin. The ponzi-nomics, as we mentioned earlier, were obvious to some, suggesting that expecting a 20% return for nothing means you'll end up with 20% of nothing. Kwon, who wasn't well liked before this crisis, as he had stated in a Reddit forum that he doesn't debate the poor, is now really not a popular guy. He is, however, trying to revive his beloved coins through another complex process which involves trying to eliminate the surplus supply of UST. This crisis acts as a timely reminder that stablecoins have no government or central banking underpinning. There are no legal protections for crypto assets. The get-rich-quick scheme of crypto is now being seen as something that more closely resembles a Ponzi scheme, something that critics have been saying for a while now with the Terra Luna coin. Terra had built up large reserves and amassed so many Bitcoin assets that it was seen by many as being too big to fail, a phrase that is common with the global financial crisis. Now people are wondering if similar market shocks could happen among other crypto, and for Luna to rise from the ashes like a phoenix, it needs to show the world that this crazy drop in valuation, which has wiped out significant wealth, can never happen again. And that's how it happened.